we have had a 2-week hiatus, and so this morning I'm kind of considering whether or not I have ever done a devotional or not. So it's almost like getting back into into the process of it again. But I was thinking over the last 2 weeks about, where I am, and this is one where I'm speaking, mostly about me. Jesus said, he said, I came to seek and save those that are lost. And we as people of believers, sometimes we try to pick out and see who we think are lost. And I would say this: Paul said, all have sinned and come short of the glory of God. So when you're trying to pick out the person who's lost, I would say the first thing to do is maybe look in the mirror. And that would be, if you're not a person of faith, that's the first person you need to deal with. The person that you see in the mirror. And the word lost is something, I think, for our civilization and where we are, is something kind of hard for us to understand about, being lost. In August of 2010, there were 33 miners in Chile where the shaft had collapsed, and all of the other surrounding shafts had been imploded, and they had no way out. And they stayed in that mine, I think, anywhere from 3 to 6 months. Their family were outside in some of the tents, as a vigil of trying to see how they could help them and when they would be rescued. And I use the word rescue because most of the people who talked about it, the news people, never said they were lost. He said they just need to be rescued. But we would have said they were lost because they could not do anything for themselves. They couldn't dig themselves out. They couldn't do any of that themselves. And so after a few months, they were rescued, and they had psychologists and all that working with them about the traumatic experience, that they went through. And notice I said something about these men that were lost. They could not save themselves. They could not dig themselves out of there. And so that's how it is, with us. And many times we go through this transformation, like the rich young ruler who came to Jesus. And he asked Jesus, he said, what do I like to have eternal life? And Jesus said, well, you know the law. And Jesus named 4 or 5 of the commandments. And he said, hey, I got this. I've done all of this, since my youth. And Jesus said, well, by the way, there's one thing that you need to do. He said, you need to sell everything that you have and give it to the poor and come and follow me, and I give you treasures in heaven. And the next verse said that this person was very sorrowful because he had many possessions. And see, that's the thing about being lost. That was just like a couple of weeks ago, the fire in Colorado that had 100-mile-per-hour wind driving this wildfire. The people who were in those 1,000 homes, they had to leave with the shirt that was on their back. They couldn't call and rent a U-Haul, get movers or anyone else, or go through there and see what they could take with them. They knew that if they wanted to live, they had to leave, and they had to give up everything that they had in what they called their home, their world. And so they left. because they wanted to live. And I'm saying for me, I'm just wondering, as I go back and reflect on my life of Christianity, whether or not I'm more or less like the rich young ruler, and whether or not I have become one of the men that Jesus said went to the temple to pray, one who was a Pharisee, who talked about what I give and how I fast and how I'm upright and I'm good. And people think I'm good and I have some integrity and respect, and not think about myself as the publican who came into the temple, who came before God and prostrated himself on the floor. And all he said, Lord, he said, forgive me, a sinner. Because see, he knew he was lost and he wanted to change. And Jesus asked all those in the audience, which one of these men went home justified? And so my point to us is, many of us have grown up in what we believe and could be a Christian home. And we were never that bad. When it was time for me to be baptized, I said, well, you know, I've been living a good life. I don't have very much to give up. I don't have very much to change. I'm adding Jesus into my life. I found Jesus. Lost people don't find salvation. Salvation finds lost people.
Amen.
In Ephesians, Paul said, Ephesians 2:8-9, he said, for by grace you have been saved through faith, and it is not your own doing. It is a gift of God, not a result of works, so that one may boast. Paul said, salvation is a gift of God. It's not of works. It's not when I say what I did, then I'm not where I need to be, because salvation is what someone did for me. It's someone working through Christ with his words and his mission. Because that's why Jesus said, I've come to seek and save those that are lost. Paul said, all have sinned and all are in the need of the glory of God. We all are. And the process of Christianity is always examine yourself. The more you learn, the more you read, the more God speaks to you, the more of this stuff we get out of our lives. The more things that we leave behind, the more things that we realize that aren't important. We leave those things behind, because one day we will leave it behind, whether we want to or not. We all will leave what we have behind. So as we in this month of January, as we in this time of reflection as to where we are, you know, what makes our day, what takes our time, what spurs us, you know, to where we are and what we do. Is Christianity, is serving God something we add on to our calendar, or is it the primary part of our life that we seek and we save, you know, those that God put into our world? Do we keep ourselves clean and pure and realize that we aren't who we think we are? We are those who have been saved by God's grace without anything other than submitting ourselves. I didn't say committing ourselves, submitting ourselves to him and allowing his spirit to enter our lives and to control us. That's where I want to be. And that's what I'm working to be. I'm not the example. I'm not the poster child of Christianity or salvation. I'm just there hoping and praying and obeying. And each day that I see where I'm not, to try to change and ask God for mercy and grace to make me someone that can be someone that tells someone else the story about Jesus. And that's where I pray you will be today also. Let's pray.
Mhm.
Gracious, eternal God in heaven, Father, you are so merciful and graceful. But Father, we who love you, always we need to be in your word and just understand, that we are a work in progress. We're not a finished product. And each day you allow us to live. And each day that we magnify your name and understand your word, Father, we are purifying ourselves. We're getting more impurities out of our lives. And we never reach that point where we are pure. That, Father, is only by your grace that you allow us to do that. But let us tell the story and let us act as if we have been rescued. Let us be happy and faithful to know that your word came to us. And Father, you pulled us up and saved us because you're the one who saved us. And so, Father, we pray that we have that message and we will share it with others who are lost and kind of going around in a circle and not knowing about how good you are in your grace. We lift you up this day, Father, in your son's name. Amen.
Amen. Can everyone hear me?
Yes, ma'am. Better.
Awesome. Yay. So I've got this thing working. Tom, I have really missed your messages, your presentation of the word over the past couple of weeks. I've really missed it. I missed it. I've missed it more than anything that we do that has anything to do with real estate.
Well, I'm sure that fur coat kind of made up the difference
Oh
for
yeah,
it, right?
So I used to tell little stories, in the beginning of Sonrisers, and I've got a doozy for you now. Sue's laughing because she already knows about it. So you may have been on here before where I've told you about a skunk or two, a family of them that were living under my house, right? Well, we've been trapping them, over the past year and a half. Well, I guess there was one little critter that was left, and he must have chewed on a wire because we smelled the spray when he died. And then I would say within 12 hours, we had to move out of our house because he's dead underneath the house. And finally got him removed. There is skunk in every square inch of our house, in the sheetrock, in the furniture. I had to buy new mattresses. It is the most and skunk. Have you ever driven by a skunk on the road that was dead? Try having that up underneath your house.
No.
It's horrifying. It's horrifying. So I'm taking one for the team, and I'm in Dallas while my husband is at home boiling vinegar at this point on the stove. We're trying everything anybody can think of to help us get this smell out. It's absolutely disgusting. I have to have a company come in and pull all the insulation out and the duct work out and my vapor barrier, clean out underneath my crawl space completely. And then I have to put it all back in. And here's the kicker: it's not covered by homeowners insurance. Rodents are not covered by homeowners. I think it should be listed under the Terrorist Act because it was pretty bad. And then I got to do a little quick thing for you, Tom. Do you see Carol and Ward Sheffield?
Yeah, I see them. I wanted to say something for them. How blessed to see them.
I know. So good. So good to see you guys. Okay. So
Wendy, I know you're going to get started, but
go ahead.
A few weeks ago, and I know we've been away for a couple of weeks, but a few weeks before that, Alan Thompson, died.
Oh, I
And
didn't know that.
yeah, it was in the paper. Well, it was in the Charlotte paper. No one does that. But yeah, Alan died over a month ago.
Mm.
And, you know, the Sonrisers and many of the other entities we had came from Metrolina RIA,
That's right.
which Alan had started. And so I just, you know, wanted to just at least reflect on, you know, how good and thoughtful he was
Hmm.
on doing that, and many of the meetings that we have and may continue to have in the, you know, in the Charlotte Metrolina area, you know, is because of, you know, one person who's had a dream of having a nonprofit group together, real estate people who had like-minded, and there are many millionaires who have come out of Metrolina RIA from just coming, listening, and participating and doing what other people said to do. They did it and became multi-millionaires. And so I just wanted to at least say something, you know, on behalf of, in memory of Alan Thompson and what he did.
Well, I'm so glad that you mentioned that. I think last time I saw him, I was in Costco and I saw him, that was probably 4 or 5 years ago. He was like, he was the original investor in Charlotte.
Yeah.
It's amazing all that he did and contributed. And thank you for bringing him up. He'll truly, truly be missed in a big way. So thank you for mentioning that. Was he still living in Lansdowne?
No, he and his wife a few years earlier had separated, divorced, and he moved outside of Charlotte, I think somewhere close where he had where his daughter lived. And heard that he had cancer, but he didn't want to go to the conventional method of chemo and everything else. So he just wanted to live. I heard he just wanted to live his life out just naturally as he could.
Well, that is just that. Thank you so much for mentioning him and bringing him up. He really just a force in our area. A lot of you are not from the Charlotte area that are on here, but that man really, he changed my world completely.
Yeah.
That's awesome. That's awesome. He'll be missed. So let's see. I know I saw Brian. There you are, my friend. Brian, are you ready to share something with us about the marketing? What's
Oh,
going on
I'm
in the
ready to
market?
share some crazy news for you today, if you're
Oh,
ready for
good.
it. Can you handle the truth?
I hope I can.
You can't handle the truth. Okay, so this news needs a little explanation. So I'm going to take just a minute to try to explain the thought process, and then I'll share the news. So last year, the FHFA, which is the governing body over Fannie and Freddie, they had started to restrict the acquisition of second home and investment homes that they would buy from mortgage companies. Their goal was focus on home ownership and less on secondary home and investment home ownership. And so they came out with a cap, and they said, we're not going to buy more than 7% of your production as second home or investment home. Made a mess of the markets. Well, the mortgage industry basically ignored it, kept sending in all the second home and investment homes they wanted to. So then they said, okay, we're going to lower it to 3% of your production because y'all didn't listen. And if you don't adhere to this, we'll stop buying those mortgages from you entirely. What they wanted to do was push those investments into another market. They just didn't want to fund them anymore. Well, eventually, Mark Calabria, the old director, got axed from the FHFA. The Biden administration won a Supreme Court case that allowed him to be removed because he really had no boss. So he's out. So they have a new director in, and the first thing she did instantly was stop that and said, okay, no more caps. So the market kind of got back to normal. So fast forward to the whys and the goals. The why and the goal is the Biden administration really wants Fannie and Freddie to support home ownership for first-time home buyers and low to moderate income buyers. So the way they're going to do that is they've created a new tax. I'm going to use the word tax because it's a fee, but they're looking at second homes. So if a house is considered a second home, they're going to be adding a fee that's going to be equivalent to 1 1/8 point. So you can either buy the rate down or you can raise the rate to hide that fee. But it's going to be between 1 1/8 of a point and 3 7/8 of a point fee on second homes. So they're going to increase the fees on second homes and on what they call super conforming loans or high balance loans. You know, like California, the loan limits are 900,000 for conventional. They're much higher than they are here. So they're going to add a fee to those high balance homes too. Again, wealthier people buying those super conforming loans. So this is going to start on any loan that is delivered to Fannie or Freddie April 1st, which means if I lock a loan March 1st and it closes March 30th, I have to package that loan up and sell it to Fannie or Freddie. It won't get delivered for a week or two. So they're probably going to have to start pushing these rates. Middle to end of February, we'll start to see the pricing impact of this change. And I thought I would just kind of share a tiny bit of, behind the curtain with you on how pricing looks for investment homes. So this is a pricing sheet from Fannie Mae, and an LLPA is a loan level pricing adjuster. So when we look at investment properties currently, we can see that there's a 2.125 hit to the rate all the way up to a 4.125 hit to the rate, depending on the loan to value. That's what's going to happen on second homes. Right now, you see there's no hit to the rate. So second homes, unless you finance above 80%, there's no different rate on a second home currently to a primary home. It's the same exact rates as long as you put 20% down. If you put less than 20% down, there's a small hit to the rate. It's 1/4 of a point. Well, that 1/4 of a point is going to change to be massive. So here's the announcements from Fannie and Freddie that says the upfront fee will be increased between 1 1/8 and 3 5/8, right? So we're going to start to see this type of pricing on second homes. And this is why investment homes are always costlier, because we have to add in 2 points to the pricing. Now, this is phase 1 of these changes. They say in this announcement that we're doing this to strengthen the enterprise, to make Fannie and Freddie stronger, safely and soundness, to ensure access to credit to first-time home buyers and low to moderate income buyers, which leads to phase 2. Phase 2, what their plan is to get rid of some of these loan level pricing adjusters for low to moderate income buyers. So here is interest rates adjustments based on credit score. Well, you can see if you got a 620 credit score and you put 20% down, there's a 3-point hit to the rate. So that's why when your credit's not as good, you pay more, because I have to price in, depending on what your credit score is, I have to price in these hits to the rate or these fees. So what we anticipate will happen is that this will level out with the new fees on the second homes and the high balance homes. We think that these loan level pricing adjusters for these lower credit scores will get reduced. Right now, if you've got perfect credit of 740 and you finance more than 60%, there's only a 1/4% hit to the rate. But look, there's a 1/4% hit to the rate if you put down just 5% or 10%. It's the same 1/4%, where your lower to moderate income, who probably have the lower credit score, they have a 3.25 hit to the rate. So what the Biden administration is doing is saying that pricing is prohibiting access to homeownership for low to moderate incomes and for first-time home buyers. So this is a 2-phase attack at trying to loosen the credit markets for the underserved, but it's going to kind of tax the very well, people buying second homes usually are pretty well off, right? They're not first-time home buyers struggling to bring their down payment together. So,
but you know what bothers me about this, Brian, is 2008 is just looming in my head, because we're going down that path again. The reason why people's scores are lower is because they're not making the payments on time.
yeah. Or it's because they have a lot of debt. If you're very, very extended, your scores will push down.
Which is just as bad.
Yes. Yeah. Yeah. And so if you look at FHA, which is the government, right? And I'll go find FHA's pricing right here. This is the pricing. All the loan level pricing adjustments are right here. So the credit scores, there is pricing adjusters for FHA borrowers, but there's many less tiers. It's much simpler pricing. And so if you have lower credit on a government loan, you do pay more than if you've got great credit on a government loan. But this is so much simpler than how Fannie and Freddie do it. So we don't know what it'll really look like. But I agree with you. If we make it really easy, now are we going to have a new wave of people that are getting mortgages that really didn't have the means to support the mortgage? So we don't know how it'll play out. The Build Back Better bill did have money in for down payment assistance to moderate, low to moderate income borrowers.
Buenísimo. ¿Y no trajo la caja o el jarabe para se manda a pedir allá?
Hold on a second. Let me mute Danny. There you go. Sorry.
I'm very easily distracted with, noises and shiny objects. So I couldn't think of my own thoughts. But yeah, so the Build Back Better bill is basically dead at this point. But there was money in for low to moderate income families, specifically first time or first generational homeowners. And we know the Biden administration is trying to increase homeownership, and that is one of the biggest wealth gaps in America. If you get into homeownership, your wealth increases, where if you don't have a home, your wealth is decreasing. So that's why they're trying to figure a way out to level the playing field. But I'm with you. Are we putting people who don't have the ability to carry a mortgage and to do repairs and to have financial hardships strike them right away? Don't know how phase 2 is going to look, but that's why phase 1 is in place. So I thought I would kind of just put some color behind the why on this pricing increase so that you kind of understood the Biden administration's goals. Agree with them or not, that's the reason we're seeing these pricing changes. So I just thought I would share that. And if you're buying a second home, get that puppy under contract soon. I know market is tight for housing, but it's gonna get more expensive in the very near future for second homes. So that's my update.
Wow, good stuff. Good stuff. Couple of things. I believe everybody deserves a home, a place to live. Everybody. Not everybody is made to be a homeowner. And the time, it's all about timing too. Maybe it's not the right time in your life. I can't tell you how many people I talk to that are wanting to get into investing. They're calling me for a loan. I ask them the 2 major questions. Do you know what your credit score is and how much money you got in the bank? That's the 2 most popular questions that you should have the answers to. And if your scores are really low and you have no money in the bank, or one of the 2 is true, it's just not the right time. You need to work to get to a point to where it works. And with this going on, we're shoving people into home ownership that might not be right for it, and causing another, 2008. And I would really hate to see that. My other thing too is, there are a multitude of non-qualifying lenders out there now that are offering very competitive rates, upper 3s, low 4s on investment properties. And I would imagine they're going to push people away from government loans and more into the arms of the awaiting non-qualifying lenders that are out there. So
that was by design. That was the whole intent of last year, just saying we're not buying more, is they wanted another market to open up. They wanted I'm trying to think of what the old, there used to be another servicer and they folded completely. It was like something Mac. Who was it? Who was there used to be another arm. There was another IndyMac.
Yes.
Yeah, so there was another, whole arm of investors. Fannie and Freddie are the really only main 2. FHA and VA are both government-run entities. Fannie and Freddie are supposed to be independent, but they're government-run currently because they, 2008 happened. But their design was, we want another market. We want another investment pool to take on those loans, because Fannie and Freddie have been saying investment loans, cash out refinances, second homes, they're not in our core mission. Right. So they wanted this to happen. And now you're seeing some other options, which is great. And we're, as lenders, I've got 3 new brokerette products. I can do bank statement loans now. I can do dockless cash flow investor loans. Right. So it forced us to go find new partnerships because we can't sell these investment homes anymore, right? So we had to go get some new broker deals. So that is by design, and that's what they want. And actually it's healthy. If you've got multiple people competing for that business, right? It's healthy for us as investors. So
Absolutely.
we might private label something. We might have to find an area that, second homes, they're going to be almost the same price as investment homes for Fannie and Freddie in some instances.
Right.
So maybe we have to find a private label place to place these loans that's different from Fannie and Freddie. So it's, again, market's going to continue to evolve, and it affects all of us. And when we're selling and buying specifically more than a lot of the other people. So it's just, good news for us to be paying attention to, surely.
Yeah, that's for sure. I know it's helped us a lot. We've got a couple private label programs now, 30-year mortgages, cash out refinances that are, we just refinanced a deal that was $1.6 million. A guy walked away. It's 25 properties in the refinance in one loan, and he walked away with $800,000 in his pocket, cash. So, there's all kinds of funky stuff out there. We're getting ready to pick up a short-term program now, short-term rental, long-term loan product out there. So they're coming out like crazy. So I'm really, really excited about that. And I also want to thank people who are texting me on my phone, helping me get rid of my skunk smell. I really appreciate that. I'm trying it all. I do have an ozone machine and it's been running like crazy. I probably need 20, but anyway, thank you for that. Brian, that was awesome. Thank you. Thank you. Thank you. Good stuff.
Happy New Year.
Yeah. It's just I love the way you explain, what the government's thinking, because no one really understands, but you just do such a great job of kind of laying it out for us. And I really, really appreciate you doing that. Thank you so much.
My pleasure.
So folks, that I do this Wednesdays with Wendy thing, and I think we're going on 2 years that we've been doing it. And God rewards me with every person he puts in front of me. It is amazing what I learn from other people. I do it under the premise like I'm helping others, but really everybody that comes is teaching me something. It's really, really cool. And I had a meeting about a month ago with Ayisha Hayes. And I asked her, I always ask people, well, tell me what it is you're doing now. And she gave me the best elevator pitch I've ever heard in my life. Do you remember what that one sentence was you said to me, Ayisha?
Oh, absolutely. You want me to say it now?
Yes.
Well, what I do is I help individuals and small business owners take their lives back from the IRS. That's what I do.
I was like, oh yeah, we got to hear about this. So she was gracious enough to agree to come on and talk to us and tell us what she does. It's very interesting and extremely timely, since we're in a new year, and it's a great time for us to make some changes that we need to make. It may not be too late to take care of what we did in 21. So ladies and gentlemen, this is Ayisha Hayes. Ayisha, I'm going to let you just take the floor.
All right. Well, thank you. I'm so excited to be here, guys. And as I also told Wendy, I don't know if she remembers this or not, but I feel like I have the best job in the whole wide world. Yes, dealing with taxes. If you may disagree with me, but I have the best job in the world. And by the time I finish with this presentation, you will see why I feel that I have the best job in the world. All right. So I'm going to share my screen with you. So give me just a moment here. Right.
It's coming. There we go.
And let's see, I'm gonna take it from the top here. Hold on. All right, so hopefully you guys can see my entire screen here.
Yes.
All right, so as Wendy said, I am Ayisha Hayes. I am a CFP, Certified Financial Planner, as well as an enrolled agent. And what I thought I would focus on today are the 7 common tax problems and how to fix them. Now, I will tell you guys, I don't do any type of tax preparation, tax planning, none of that. I used to, and I still have the skill set to be able to do that. But what I focus on now is tax resolution. So what is tax resolution? And I will tell you guys, prior to 2015, I never even knew that this term existed. Tax resolution, I never heard of it. But all tax resolution is helping individuals or small business owners with their back tax problems. So perhaps they owe the IRS, $20,000, $100,000, $1.2 million, which is a real figure that I've helped someone with, and they can't afford to pay it. Or, maybe there's some tax liens out there or levies or whatever it may be. I help by negotiating directly with the IRS. So that's what tax resolution is. Now, there are only 3 types of professionals that can represent a taxpayer before the IRS. That is a tax attorney, a CPA, and an enrolled agent, which I am an enrolled agent. Okay. And enrolled agents have been around for forever. We get our license, our ability to represent directly from the Department of Treasury, not from the IRS, but directly from the Department of Treasury. So I tell you guys, I see so much stuff. It's hard to pick out, like all the real common areas. So I thought I would talk about the top 7 that I see over and over again and how to address them. Because, I want people to know that you don't have to just take what the IRS says or just be bullied by the IRS. You do have rights, all of us. There is a such thing as the Taxpayer Bill of Rights. I bet you didn't know that. I didn't know that prior to 2015. But it exists. And my goal, my mission is to make sure that clients, taxpayers, that their rights are never violated. And when they are, which there are times when they are, that the IRS is called on the carpet and that they're held accountable. We do not just have to roll over for the IRS. So the top 7 that we're going to talk through today is number 1, I haven't filed in years. And I have people like that who haven't filed in 20 years. That's unfiled tax returns. Number 2, tax lien wrecking my credit. We'll talk about some IRS tax liens. Number 3, the IRS took my money, bank levy or wage garnishments. Number 4, the IRS is saying that I owe more money. There's been a tax increase. And number 5, I can't pay my tax bill. I got delinquent tax balances out there, no way to pay it. Number 6, I've been hit with thousands in penalties. My balance just keeps going up and up, tax penalties. And number 7, I'm being audited. What in the world do I do? That's a tax audit. So guys, we're just gonna jump right in here. And I don't know how you guys typically work this, if you take questions throughout, but if one of you has a question, I don't mind just stopping and answering your question. You don't have to wait to the end because I don't want you to forget your question. So ask it at any time here. So we'll start off with, I haven't filed in years. Now, real life example, actually 2. I had a salon owner. He came to me and he said, Ayisha, I'm just so scared. I haven't filed taxes, both my personal taxes and my business taxes, in forever. And I'm scared to file. And I'm like, well, how many years have you not filed? He was like, Ayisha, I haven't filed in 20 years. And this is a guy that I've known for a while. So this had been something that had just been eating him. He was living in fear. This guy had been living in fear, guys, for over 20 years, really. Thinking that at any given day he was going to hear, and it was going to be the IRS taking him off to jail. And what I told him is, I said, you know what, first of all, let me just ease your fears right now. The IRS, they do not want to put you in jail. They don't. Because that's a surefire way of not getting their money. If they put you in jail, you don't have a way of generating money. And at the end of the day, that's what they want. They want the money. So they don't want to put you in jail. Now, if you're some, big time celebrity or whatever, and they want to make an example out of you, then possibly. But I told him no. And he said, so Ayisha, I just want to go ahead and, do I file all those taxes? Oh, and let me tell you, by the way, the reason he wanted to file the taxes is not necessarily because he wanted to be some good, upstanding citizen. He wanted to file taxes and get right with the IRS because he had fallen in love with a woman. And he wanted to make things right. He did not want to bring her into his mess. So one thing I shared with him, and a lot of people don't know this, is that with the IRS, they are really only looking for the last 6 years of tax returns to be filed in order to be in what they call filing compliance. So for now, we're in 2022. The 2021 tax year filing season is about to open. Right now, the IRS is only looking for 2016 through 2021 tax returns. Beyond that, they're not even going to be looking for them. So if we had filed all 20 years worth of those tax returns, we could have possibly, and if he had balances, we would have created some unnecessary tax balances that the IRS would not have even been looking for. A second example is I actually saw this in action, and it broke my heart when I saw this. A lot of tax professionals that have been in this industry for many, many years, CPA, other, non-CPAs, accountants, they don't know this. They don't know this. So I saw this happen to another one of my clients. Now, they came to me after this had already been done, but their accountant filed 10 years worth of back tax returns for them all at one time, not knowing about that 6-year, kind of look back period, filed 10 years. And those 4 years that weren't really going to be looked for by the IRS, it created $40,000 in taxes that they otherwise would not have been on the hook for. But the fact that they filed those returns that the IRS would not have been looking for, they now have a tax balance that they have to pay. And yes, the IRS was starting to come after them. That breaks my heart when I see people that create unnecessary tax balances. So when you do have unfiled returns, you do want to make sure that you file the appropriate years. And sometimes, guys, I know it's overwhelming. Sometimes you just have to start where you are. And it may be just filing that 1 year and just going forward. And a lot of people say, well, Ayisha, I no longer have my records. Well, it's fairly easy to get wage and income transcripts from the IRS. It has information about your W-2s, your any 1099s, it has mortgage interest, the 1098s. You can get all of that to be able to file your tax return. Please, 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 that last bullet point on there, do not let the IRS do you a favor by filing your tax return for you, because they will do that. If they think that they can get some money out of you or that you may owe something to them, they will do something that's called a substitute for return. Guys, you don't want this, because with that substitute for return, they're only going to take information that they have on file for you. So that's going to be W-2s, it's going to be 1099s, any K-1 information. That's what they're going to pull in as income. And guess what? They're not going to give you any of the corresponding deductions that you may be fully entitled to take, because they don't know about it. They don't know what deductions you're entitled to take, what credits you're entitled to. They give you none of that. So your tax balance, I guarantee you, is going to be higher than what it would have been if you had filed yourself. Number 2, the tax lien. I have a tax lien on my credit report, and it is just absolutely wrecking my credit. Now, going back to, I believe it was 2018, there was a change that was done where the credit reporting, the credit bureaus started taking liens off of credit reports because there was wrong information on there. So what they now do is they make sure that they have all of your correct information. But in the event that there's a tax lien already on there, you can get it removed. If you have a tax balance of $25,000 or less, you can request what's called a lien withdrawal, okay? Not a lien release, we want a lien withdrawal. And you have to set up a direct debit installment agreement. That's just automatic payments coming from the IRS. After the third withdrawal, you can request that lien withdrawal, and it will be as though that lien never existed in the first place. Will not show up on your credit report, won't show up at any courts, no place. It's as though it never existed. And again, it's very important to ask for a lien withdrawal, not a lien release. Number 3, IRS took money from my bank account, a bank levy or wage garnishment. And again, I have seen people just totally ruined by this, but there's a way to stop this in its tracks. You can set up an installment agreement, or you can get into something that's called currently not collectible status. And that's where you can prove to the IRS that you simply don't have the funds to be able to pay, to make monthly payments. And once you do that, they will say, okay, you're in compliance. We won't accept or respect any payments from you, but you're good to go. And we'll take that levy off. We'll take off that wage garnishment. And in some cases, there's a fee from your bank if they have to, be in compliance with a levy or a wage garnishment. In most cases, you can actually get that fee back. People don't know that. Just by calling and asking the bank, you can get that fee back. And number 4, the IRS says that I owe them more money. And you know what, guys, I'm going to go back to this number 3 because I had a lady who had a wage garnishment. I think her paychecks were like maybe $6,000 or so biweekly. She was, she earned really good money. The IRS levied her wages, and they were leaving her with $1,000 out of every paycheck. Yes, $1,000. So her accountant actually got in touch with me, and I was able to, get involved, and I got that stopped. And so she was able to get her full paycheck, in place. But it is not pretty. The IRS can come in and really make life difficult for you. Number 4, the IRS says that I owe them more money. So you may get a notice in the mail saying that, hey, we recalculated your tax return. There are some numbers that were off, and you now owe an additional $20,000. I get that all the time. And a lot of times it's because perhaps, an individual may have left off a retirement distribution or forgot to include, a 1099 miscellaneous income. They now call it NEC income. Or, it could be that just something was not reported correctly. By all means, you want to respond to that notice, because if indeed you forgot to leave something off, especially if it's independent contractor income, you want to make sure that you go ahead and report that income, but also report any type of deductions that may be also associated with that income. Because remember, the IRS, they'll count that income, but they will not count the deductions because they don't know what it is. So don't just take their word for it that you owe them more in taxes. No, you recalculate it or engage the help of a professional like me to help you do that. The IRS, they make mistakes all the time. So you always have to check their numbers. I would say about 100% of the time that I'm working a case, I find errors with the IRS calculations, almost 100% of the time. And so you simply want to send in that documentation. And number 5, I just cannot pay my taxes. I owe, I'm going to use a real number here. I owe $86,000 and I can't afford to pay it. The IRS is after me. They're saying that they're going to, levy my bank accounts. They're going to garnish my wages. They're going to just embarrass me by telling the whole world that I owe taxes. Well, number 1, make sure you actually owe that tax because they mess up all the time. But also 2, if you can, get into an installment agreement. And there are different types of installment agreements out there, guys. And when I work with a client to set up an installment agreement, I make sure that it's something that works for them, not necessarily what works for the IRS, but what is a payment amount that works for the taxpayer. And I don't ever allow the IRS to dictate my client's cash flow. I tell the IRS, or we tell the IRS what we're going to pay per month. We don't allow the IRS to dictate that. Again, we've already talked about currently not collectible status. If you qualify for that, you don't have to make any payments at all. But let me tell you the one that is just the beauty. And people, you probably have heard the commercial, on the radio about paying pennies on the dollar to the IRS. Guys, that's a real thing. And I do it every day, all day. It's a real thing. And it's called an offering compromise. So real story, clients, husband and wife owed $86,000 in taxes, could not pay it, had no idea what they were going to do. Came to me, again, their accountant sent them to me, and we were able to put together a package. I did a thorough analysis, and I got that 86,000 down to, and normally this is where I make people kind of guess. And I'm going to take a couple of guesses. If you guys are brave enough to kind of guess, unmute yourselves and throw out some numbers. I got the IRS down from $86,000 down to, and I want a wild guess. Wendy, you can't guess, but somebody give me a guess here.
10 grand.
Oh, was that Brian?
Yes, it was Brian.
Brian, you are so off. I need somebody to go lower. Come on, don't be afraid.
2 grand.
How much was that?
2,000.
Oh gosh, okay. Was that, I don't know if that was John or not. $2,000.
Yep.
John, you are still off. I need somebody to go lower.
Nothing.
Gabe, you are by far the closest. So, so we got them down from $86,000 to $776. That's a real story. Had another client who owed $64,000, got her down to $100. And guys, I'm not talking $776 a month or $100 a month. I'm talking $776, write the check, you're done. You're done with the IRS. That's an offering compromise. And the IRS, they like to tell me, and I've heard them tell other people as well, that, oh, this isn't let's make a deal. Oh, this is exactly what it is. It is exactly let's make a deal. I make deals every day, all day. That's my job. And by the way, a lot of people don't know this, and the IRS is going to tell you this. They cannot collect from you indefinitely. I don't care if you owe $1.2 million. They only have 10 years to collect from the date that the tax was assessed. They have 10 years, guys, to collect. After that 10-year window, and each year has its own expiration date. After that 10-year window, when that expiration date is reached, they are required by law to write off the remaining balance. I don't care if it's $10, $10,000, or $100,000, $1.2 million, they're required to write it off. And I've seen it. Oh, guys, my battery is running low. Hold on. I'm so sorry. Let me go and get my plug.
That is amazing. I'm amazed. I'm thinking of a time back in 2015. I had an accountant working with me that the way she was the bookkeeper, she had our income running through two companies, and I basically paid taxes in double, had to pay taxes double of what we really should have paid. I wish I had known you back then.
Oh gosh, I wish you had too. All right, let me get back to the slideshow here. Go to the current slide. And can you guys still see my screen?
Yes.
Okay.
I put your email address in the chat.
Okay.
And I've got some people asking for your phone number. Is it okay if I put that in there too?
Absolutely.
Okay.
And guys,
Okay.
you can write it down right now. My number is 704-298-1040. And I would love to talk with any of you because I consider this to be my ministry. And this is the gospel that I'm spreading. People need to
awesome.
know about this.
Now, did you mean to have 1040 in your number?
Where are we looking?
And your phone number, your last four digits are
Oh,
1040.
absolutely. That was by design.
Oh, that's
Absolutely.
awesome.
Absolutely, I did.
Okay, so I've got a question for you about the 10 years.
Okay.
So if it hasn't been paid in 10 years, they have to write it off. Does that include if you are on a payment plan?
Yes, it does. If that payment plan hasn't fully paid the balance by the time it reaches that expiration date, yes, ma'am, they're required to write off that remaining balance.
Wow.
Yes, and they won't tell you that. And guess what? I can see, as a professional, I have special software that allows me to go in and dig around into the IRS's system. I can actually see when that date is. I can see what date that they're supposed to write it off. And about 3 to 4 weeks before they actually start the process, I can see that they've started the process. And once they start the process, they don't stop.
Interesting. Very interesting.
Absolutely. All right. So the last one here is almost the last one is I've been hit with thousands in penalties. So another little known tax secret is there is a program that's called first time penalty abatement. Again, the IRS isn't going to tell you about this. And I think there was a number that, oh gosh, what was it, like 90% of penalties that are abatable or able to be waived go unwaived or unabated simply because people don't know about this program. But the first time penalty abatement program is essentially, just a gimme. You can get 1 year's worth of penalties back just by asking for it. Okay,
Wow.
but you have to use those words, first time penalty abatement. Now, you don't get to choose the year. It's already kind of going to be, dictated for you. But let's just say you have some penalties for 2017, $5,000 or so. As long as the 3 preceding years have never had any penalties on them, so 2016, 15, and 14, you are guaranteed to get those penalties waived for or abated for 2017. Now, the balance, the tax balance itself has to be addressed. So as long as you're in some type of an installment agreement or, have paid the tax in full, you're going to get that penalty abatement. And guys, you don't have to have a good reason. You don't have to give them an explanation on why you want this penalty abatement. You don't have to ask, you don't have to grovel, you don't have to beg. You tell them, I want the first time penalty abatement for tax year 2017. I was speaking to a Rotary group. This was prior to the pandemic, and I was talking about penalty abatements. And actually, I was given a more than just penalty abatements. I was talking just about other areas as well. But afterwards, there was a guy that he just was like kind of like circling around me, just waiting for other people to leave. And finally, he got to me, and he said in a real hushed voice, because he didn't want anybody else to hear. Yeah, I have some of those things that you said that you were talking about. I was like, what taxes? No, the other thing. I was like, what, penalties? Yeah, those. So he said he had penalties, and it stemmed all the way back to tax year 2000 when he was married. And he and his wife, ex-wife now, they had always filed married filing separate. But for that particular year, they both had separately incurred some penalties. And so I said, you know what, call my office, let's talk about those penalties. And he had about $6,000 in penalties, and he engaged me. And I was able to, and by the way, his tax balance had been totally paid off. He had already paid the penalties, everything. But we were able to work with the IRS, and I was able to get him all $6,000 of the penalties that he had paid in 2000 or for tax year 2000, able to get him all of that back. And once I did that, he was like, wow, I can't believe that you were able to do that. So the next call that I got was from his ex-wife, who also had $6,000 in penalties. I got her the $6,000 back. The next call I got was from their CPA, who was wondering, how in the world are you doing this? So I was able to get some business out of him too. So that's tax penalties, first time penalty abatement. Guys, I'm telling you, that can be your best friend there. And the last one is I'm being audited. Guys, do not ignore an audit. It will get worse if you ignore it. If you don't have the ability to reach out to a professional, this is one where you do want to call the IRS back. You do want to talk with the agent. But I would truly encourage you to reach out to a professional, someone like myself who can help guide you through this. Because I will tell you, the IRS, they've gotten to be a lot friendlier, but at the end of the day, their number one priority is to collect as much money from you as possible. My number one priority is to give them as little of your money as possible. That's it. What questions do you guys have?
Let's see. Can you hear me?
I can.
Okay, great. Didn't know if I was, let's stop sharing your screen and let's get some people's faces out here. I do
Alrighty.
see, Laurie is asking the question is, how is it that you get paid?
Okay, hold on. Let me stop sharing my screen.
I know I can't think and do stuff at the same time or talk and do stuff.
Okay,
There we
here we
go.
go. All right, so how do I get paid? That is a great question. So I have an upfront retainer that I charge, and that retainer is $1,500 if someone owes less than $100,000. If it's $100,000 or more, I have an upfront retainer of $3,000. And from there, for the actual negotiations, there is an additional fee for that. And that can range depending on what the service is that I'm providing. So if I'm setting up an installment agreement, that's probably going to be one of the lower fees. That's about maybe $1,200. Again, it depends on what your balance is. It can go up from there. My most expensive one is the offer and compromise, which, my highest fee for something like that has been $32,000. But again,
Wow.
there's someone who owes like, $1 million, and we're working to get that down. But that's how I get paid. The retainer is due upfront, but the actual negotiation fees, I don't want to make a tough situation tougher. So I will set up a payment plan even for my fee. So I'll break that up over a number of months.
Very interesting. Anybody else got any questions? I'm sure you do. Are you meaning to share the screen again?
I don't think that's me.
Oh, well, it's not me. Okay, I don't know what happened there.
Yeah,
That's,
no, that was
funny.
me.
I promise I didn't even have my hands on the screen. That was
Me
really
neither.
weird. Anybody else got any questions at all? I've got, let's see,
I always like to ask how and why, what made you get into this field? Maybe you said it and I just missed it.
No, Gabe, I didn't say it, but that is a wonderful question. I was a commercial lender for 16 years. And in 2014, there was a transition at the bank. It would have required me to go to Ohio, which there was no way I was leaving Charlotte. And so I went full-time with my tax practice, which I was already doing on the side. I was doing for friends and family, but I went full-time with it and started, just accepting other people. And one of the things that I saw, Gabe, was, people were coming to me and I would do their return and, I would see the number that they owe. And I'm like, oh gosh, they owe $30,000. I must have done something wrong. They can't owe $30,000. And I'm like, these people are going to think that I'm an idiot, that I don't know what I'm doing. And so I would sit down with them and we would go through the return and I would say, okay, yeah, take a deep breath. I'm like, okay, you owe $30,000. And they're like, okay. And I'm like, okay, can you afford to pay $30,000? No. Well, what are you going to do? Add it to the balance I already owe. Well, how much do you already owe? $60,000.
oh my goodness.
By the time I got the third person like that, I said, oh, no. This is not how we were meant to live. And these people were coming into me just defeated, absolutely defeated. One lady, she was having to take pills. She had 3 kids and she's having to take pills just to be able to operate, just totally not functional. And this was not how we were designed to live. So from that, I started researching how to help people who owed back taxes. And I stumbled upon the world of tax resolution. There's a complete industry out there. And I started going to all types of conferences, reaching out to the gurus in the field. And that became what I did. I stopped all the tax preparation, all the bookkeeping, accounting, focused 100% on tax resolution because people needed me.
Wow, that's really that's incredible. I know my 3 kids make me want to take pills too, but um let's see. Are you able to do an initial consult for free, or do you have to do the fee up front?
So I used to offer free consults. But in 2021, we actually implemented a consult is just $150 for typically a 30-minute consult. However, for any one of you on here, with the Sonrisers group, if you call me, I will waive that $150 consult fee.
Awesome. Thank you for that. Thank you for that. It also, she's also asking, do you deal with state tax issues as well? And if so, which states?
Yes. I deal with all states.
Oh,
I
yeah.
I shouldn't say this, but I hate the state of North Carolina. Well, North Carolina Department of Revenue. And guys, please forgive me for saying this, but they are gangsters. Everybody thinks that the IRS is the big bad wolf. No, it's the North Carolina Department of Revenue. They are the big bad wolf. But yes, I do deal with them as well. All
I
state.
love that. I love that. That's awesome. Any other questions at all? Okay, I have I've copy and pasted Ayisha's email address again. Her phone number again is 704. What's the middle number?
298.
298-1040.
Yep.
What a great, easy number to remember. So I put that in the chat box as well, folks. Ayisha, good stuff, girl.
Now you see why I love my job.
Yes, I do. And I like the way you look at it as a ministry. We all should look at our jobs as a ministry. And that's awesome. Good stuff I never realized. Because you get a letter from the IRS wanting to audit you. Your as I put it, your butt cheeks tighten up real quick.
Yes.
It's
Well,
scary.
When I tell people, what's anxiety inducing for them and just fearful and stressful for them is fun for me. So I tell them, let me have it, transfer your stress to me and let me have fun. Because this is fun. I love going up against the IRS.
That's awesome. I'm glad we have you on our side. Thank you. Thank you again. Thank you so much. Y'all, I got to go because I got to get to a mastermind meeting. It was good to see everybody today. Carol and Ward, I'm so glad you guys are on here and we want to see you every week. Y'all have a great, incredible week. Pray for my odor, my skunk odor. Thank you for all of the comments I've been getting on how to fix it. I'm going to try them all. Love y'all, mean it. And this is recorded. So if you want a recording, just let me know, Wendy, carolinahardmoney.com, and we'll get it over to you. Love y'all, mean it, and see you next week.